This is Bazaar Morning Call. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning, you're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, slightly chilly here in Mumbai, but some of the nicest weather we have in the city. We're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Sonia and Nigel. Guys, hi, good morning.
Hi, good morning Prashant, good morning Nigel. It's
morning.
Pretty cold in the markets as well, right, after what we saw yesterday. But this weather, I mean, it's that 1 week of the year that you get in Mumbai and you got to enjoy it to the max, and this morning was really lovely.
It's a beautiful morning, but not so beautiful for the market, Sonia.
Yeah.
And as you said, I think the FI outflows are a little bit worrying, and I think we'll discuss that in more detail.
Absolutely. Yesterday was a bit of a surprise, right? I mean, the way the market sold off, it made a higher high and then it just completely collapsed. So let's just quickly tell you what you need to know as we begin another trading session. I'll start with where we left off, which is basically a 300-point fall, a nifty fall that we had yesterday. And it was, of course, a mix of factors. It's never one thing. It's a mix always. And it was certainly so yesterday as well. I'll come to this, but I mean, you know, look at that, 1.5%. At one point, it looked like the Nifty would be down 0.5%, 0.75%. But in the last hour, I mean, it fell more. And finally, it was a 1.5% cut. Now, overnight, markets are just okay. I mean, you know, they basically made a slightly higher high. S&P 500, a quarter. Nasdaq, about 0.4%. The Dow also. By the way, all these indices are holding on to new all-time highs. The Russell 2000, of course, the big underperformer, that was down slightly, but nothing very, very large. The 10-year is holding above the 4-year. The 10-year yield, that is in the US again. I mean, you know, 3 basis points up, 3 basis points lower, but largely unchanged, 4.14. And the dollar index has moved up a tad bit. It's at about 103.5. So those are indicators which we track every day. I mean, oil, not very much has moved. It's at about $79 a barrel. You know, the first batch of US big tech earnings came through. Netflix reported numbers, and numbers look optimistic, which is actually, you know, pretty good news. There's also news which we mentioned yesterday morning. Of course, the US presidential race, which is going to happen. The elections are happening later this year. And in all likelihood, it's going to be Trump versus Biden. Trump, of course, won the Iowa caucus. That's last week. And it looks like he's basically he's got the nomination in New Hampshire as well, which is one of the first states to go for primary polling. Now, this is something which will sort of, you know, dominate a fair bit of, slowly but surely, I think markets will start to fixate on this once again. You know, what if, and by the way, given the fact that the current sitting president, US Biden's ratings, etc., are on the lower side, relatively speaking, I mean, what are the chances of Trump? And I mean, that kind of line of thinking will come into focus over the next couple of months as well. Now, let's just come to the market here. Now, the Nifty yesterday sold off. It basically sold off and broke the recent low, which was 21,285. We left off about 40 points under it. 21,240 odd was the close yesterday. The Nifty Bank low, similar low, was 45,430, and we broke that as well. We left off at 45,015. The Nifty Bank, of course, has been much weaker, much more weaker as compared to the Nifty. It's a mix of factors, as I said. What are the factors? It's a sharp run-up that we've seen. Profit taking naturally comes in. And I would say it's a good thing, especially what we saw yesterday. Public sector companies, especially these railway stocks, right? 6 or 7 of these railway-related stocks, all PSUs which had run up in one straight line without a break. I mean, letting off some steam once in a while, I think, is absolutely required. And that is what we saw yesterday. But it was bigger than that yesterday. HDFC Bank, for the last many days since results came out, has been hurting. That's a large heavyweight. Yesterday also, if you had to assign blame, HDFC Bank index points was the largest culprit. Z setback, I mean, you know, it's a large big $10 billion merger, which is not going to happen. I mean, sentiment-wise, it's not just about how much weight Z has, but it's just a sentiment setback. Of course, earnings, which have been coming through at the margin, they've been a bit subpar as well. There's just one more thing I'd like to touch upon, which is, you know, and this was talked about quite a bit in the last 1.5 hours or so, which is that the deadline for disclosure of FPI ownership rules, these are SEBI's rules, and the deadline is the 1st of February this year. It was cited as one of the reasons for the sell-off, that FPIs and FIs are going to sell over the next many months. There was a report in one of the newspapers which put the number in terms of potential sales, which could be to the tune of 1.5 lakh to 2 lakh crores over the next 6 months. I think that's just, I mean, a bit of an exaggeration. If you look at yesterday's figure, FII sold about 3,100 crores or so worth of stocks. You know, it's a large number, but it's not unusual. We've seen, I mean, you know, on bad days, because the bases become so large, 6,000, 8,000, $1 billion of sales. So, I mean, the number standalone is meaningful, but it's not very, very large in that sense. And the feedback, I managed to have a word with a couple of people, and the feedback is that, well, the issue is real, and FPIs will need to find a way around it. But because they have 6 months from the 1st of February to sort this out, I mean, a way out will be found. And it's unlikely to be as disruptive as some of these reports, etc., were, you know, making it out to be. But it's a live issue, and we'll get you more on this one as we go along. Just I want to wrap this up with two levels. On the Nifty, and this is a level we put out for the last many days, support comes in at the 38% retracement of the big rally which we saw from the lows of October 23 to January 16, 2024. That was the high that we made, and that number is just under 21,900. I mean, just take 21,900 as that support, and that's the big one. Similar retracement, the high in the Nifty bank was not made in Jan, but in December last year, and the retracement of that October to December rally is 44,600, and that's a support which is about, what, 1.5% away from where we left off on the Nifty bank as well. Closer there, I think, you know, it makes sense perhaps to go in and, you know, buy. But give it time. The market is digesting a fair bit of stuff. The GIFT Nifty is indicating about a 70-odd point higher start this morning. Sonia.
Oh, absolutely. And, you know, yesterday, the big takeaway was the capitulation, first signs of capitulation in the broader markets. And we had spoken about this on Editors Roundtable as well last week, as to how the mid-cap index is starting to get a bit cautious now. And, you know, valuations are very, very stretched. I think that's the theme for today as well. And over the next few days, just be a bit cautious in the mid-cap end of trade. There was also large selling by foreign investors yesterday. So FI sold about 3,100 crores in the cash markets. And as I said, a large chunk of this is coming in the mid-cap space. So keep an eye out on that. The valuations in the mid-cap end of trade are stretched compared to the large caps and compared to, you know, the overall Nifty. Also watch for the PSU index. The index itself was down 4.5% yesterday. And first signs of selling is what we saw in the PSU bank index yesterday. It was down about 250 odd points. Looking at some numbers, now Axis Bank's numbers are a bit mixed. The operating profit growth was weaker than peers. So in that sense, there was a bit of disappointment. But the loan book has grown 22% overall, with a big chunk of the loan book coming in from the SME loans. So, you know, it's a mixed picture, but largely you'd have to say there are some disappointments. So maybe the stock could be under a bit of pressure. But a lot of other stocks in focus. Pidilite reported a very good set of numbers, volume growth of 10% plus. It was a steady quarter from Tata Elxsi, strong earnings from Sona Comstar, from KEA Industries. And in results today, you have a long list. There's Tata Steel, Tech Mahindra, Bajaj Auto, TVS Motor, so lots from the two-wheeler space as well. It'll be a very good quarter for the two-wheeler sector, but a lot of that perhaps is in the price. But just watch out for global markets too. The Nasdaq futures have actually gained a bit after Netflix posted a jump in subscribers. So that was the big takeaway from the global markets. And the GIFT Nifty implied opening is suggesting about a 60-point up move. But I think, you know, now you'll start to sort of separate the men from the boys, especially in the mid-cap end of trade where things are looking a bit cautious.
Well, that's right. You know, Sonan, yesterday the end to trade actually was particularly worrying. Yeah. And this FI selling is worrying me. I made this point even on closing bell, that there could be a technical factor at play with regard to the disclosure of the FIs. And that could be one of the reasons why we could see a big sell number. Because just take a look at what's happened in the last few days. The last 4 sessions, you're either seeing $500 million of selling, close to around or to more than $1 billion of selling. And that's getting a little bit worrying. As we had mentioned yesterday as well, there's a technical reason at play. SEBI has tightened the ultimate beneficial ownership norms. That's starting on 1st of February. So that could continue for the next few sessions as per the feedback that I got. And yes, you just pull up the Nifty and you pull up the Nifty bank. The way the Nifty bank fell off, you know, that indicated that there could be massive FII selling. And the gross volumes were extremely massive. Yes, the net number was close to 3,500 crores, but the gross volume was very, very high. Why is that? Because the FIIs have highest exposure to the Nifty bank. Also, I look at the delivery on the Nifty stocks. On an average for the last 20 days, the average delivery on Nifty stocks is around $1.8 billion. Yesterday, that number was $3.5 billion. So the delivery-based action yesterday was double of what we saw on an average on the Nifty stocks, telling you that some of these stocks that have high FI ownership, there was massive selling, and that was indicated as well towards the end of trade because big volumes out there. How are the FIs positioned in the F&O market? They're net short, close to 19,000 contracts on the short side, and they're net short with close to 53% of their positions on the short side. The PCR, it's coming down to the lower end of the range. Not to say that it can't go down to around 0.65 odd, but now it's at the lower end. Normally at around 0.65, you see some bit of a bounce. That's because yesterday you saw aggressive call writing, 21,200, 21,300, 21,400 call. Between them, they added more than 1 crore shares. And we are in expiry week as well, so the bears feel they're in control. And that's why we saw very, very aggressive call writing in trade yesterday. Which brings us to the levels. On the downside, the 50 DMA, 20,900. That becomes a crucial level that you're looking at. Support is in this vicinity of 20,800, 21,000. You don't want to look at a level below that. Otherwise, you could see a very, very sharp correction. So most market experts are looking at the 20,800, 21,000. While on the upside, till we get past the 21,700, because we visited them so often, and then in fact, we couldn't conquer that. So that becomes a resistance zone on the upside. The Nifty Bank, 2 levels I'm looking at out there. The 100 DMA, that's important, and the 200 DMA as well is the one that I'm looking at on the downside. My advice would be, don't deploy on your money on the long side if you want to go long. There is likely to be some selling, and this gap up may not sustain. That's the gut that I have going by the FI selling. But individual stocks will provide great entry opportunities, the high quality names, particularly that have high FI ownership. Also watch out for any kind, there is some hope that maybe there'll be some kind of amendment to this circular that came out. We'll wait by for that. But for the time being, this FI selling is worrying me.
Oh, absolutely. And especially in the broader market. So we have lots lined up in the next 2.5 hours. Without wasting any time, let's kickstart the show. In the first half hour of the show, here's what you'll get to see. We'll get you updates from the market across the globe. Cameron Brand of EPFR Global will join in to discuss the global trade setup. Later, our research team will bring you CNBC TV18's list of top 10 stocks for the day.
Okay, well, let's get you some money market views as well. On the rupee, according to Pankaj Chitanglia of First Basis, this year will belong to dollar bears, and the dollar index could be capped around the 104 to 106 levels before falling below 100. While there is a mild upward bias in the USD INR in the short term, it is likely to be capped. The resistance level is 83.35 in the medium term. The pair should go towards 82.5 in the back of weak dollar index and the possibility that the US would lead India on timing of interest rate cuts.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says the Indian 10-year benchmark traded in a range of 7.14 to 7.19%. For the week, bond yields retracted higher on global cues as markets paired rate cut expectations on stronger US retail sales and UK CPI data. The SDL auction size was also higher than planned. Going forward, the market would look for FOMC rate decision and government borrowing plan in the upcoming union budget. He expects the 10-year benchmark to trade in a range of 7.1 to 7.2% for the week ahead.
Well, a lot of stock-specific action that we're going to be tracking for you. We'll get to that in just a bit in our special top 10 segment. But we're looking at Axis Bank, Pidilite, L&T Finance, Tata Elxsi and Sona BLW Precision. All of them will be reacting to positive news flow. Add to the list, MGL on the positive side, while on the flip side, United Spirits, Karnataka Bank, JSW Energy and Havells will be reacting to negative news flow.